Hello and welcome. I'm chonalfo, owner and investor of Golden Lion Equity Group. Today, I'm going to go through and talk about a sample deal package of what my team and I mainly look for, hopefully giving you a better idea and mental image of what investing in multifamily looks like. I will go over the property itself, the business plan, the whole overview of the deal, and what the returns will look like on this specific deal, and what we mainly look for as a team on all other deals we try to acquire. This is Fairfield Lakes Townhomes, a 101 unit value add investment opportunity that is located in Beaver Creek, Ohio. Now let's get on and move on to the opportunity overview. The opportunity overview. As you can see, the average annual return is 15 to 17%. The average cash on cash return is 9 to 11%. The investor preferred return is 7%. The expected hold period is 10 years. The closing date was April 27th, 2018, and the investor equity is 70%. Opportunity summary. Currently, rents at Fairfield average $995 a month. Competition charges over $150 more for similar looking units. Raising rents to market value will increase the value of the complex by 20% without any capex. Market rent levels of $1,200 are approximately 15% of the median household income for the area. Most financial analysts allow 33% to be financially stable. Household income can drop more than 50%, and Fairfield is still considered affordable, making this property almost recession-proof, which is amazing. Beaver Creek has a waiting list for B townhomes, and there are very few A townhomes even available in the area. This is a great opportunity to reposition Fairfield Lakes. With professional management, select interior upgrades, and more aggressive marketing, A- class rent is achievable. About the investment. Fairfield Lakes has 16 buildings, 101 units, built in 1999 to 2000, has a lot size of 12.6 acres. The rentable square foot in this property is 129,920. The two bedroom that takes up 33 units has an average of 1,127. The three bedroom that takes up 68 units has an average of 1,360. The roofs are pitched shingles. The construction, concrete foundations with wood framing. The exterior is brick/siding. The plumbing is PVC/copper. The HVAC is forced air. The wiring is copper. Parking, 2 spaces per unit with additional guest parking. Fire protection, a firewall, and smoke alarms. The equity investment. This property provides investors the opportunity to be part of a well-maintained multifamily property with a history of strong cash flow. The current market condition favors growth and the need for A-class housing. We have plans on capitalizing on the positive market trend by A, increasing rent to reflect market value, B, establish professional management, C, making improvements that will substantially increase income and add value over the holding period. The purchase price for this asset was $10,900,000. The operating capital is $255,117. The capital improvements is $709,020. The closing cost is $560,863, giving us the total uses of $12,425,000. The debt servicing or debt financing is $8,175,000. The equity investment is $4,250,000. The business plan. Fairfield Townhomes represents 3 key opportunities. It's below market rent. The current rent is $950 for the 2 bedroom and $1,025 for the 3 bedroom. Local competitors are charging $150 to $200 more per similar unit, so we can increase rent to market value. Market rent without capital improvements is $1,100 for a 2 bedroom and $1,300 for a 3 bedroom. Additional improvements to the property will make these townhomes even more desirable. The property right now is self-managed. Fairfield has been a family business since 2000. In-house management has done a good job maintaining the complex, but has done very little marketing. So by adding a professional management, we've identified a third-party manager who we feel will maintain the strong operational excellence while drastically increasing the marketing reach for this property. It's at a B class. The interiors are the same as they were in 2000, but looks like in the 90s. This needs updating. Same with the signage and the name. We're going to turn it into an A class. There's a high demand for updated interiors and townhome style living. We will bring needed renovations to reposition this as a choice for higher end townhome living, rebranding it to the Fountains of Beaver Creek. The community features and the unit features. Community features: assigned parking, two beautiful ponds, 24-hour on-call maintenance, a playground, on-site management office, half basketball court. The unit features have a front porch, private rear patio, large eat-in kitchens, a crown molding cabinetry, electric appliances, storage space, walk-in closets, jacuzzi bathtubs, cathedral ceilings, and skylights. The capital improvement. This will show you the total capital that is needed to renovate the property, renovate the units, the exterior, and other materials that we want to add to the property overall. For the 2-bedroom, you can see for the 33 units, we need to upgrade the lighting, the faucets, the cabinet pulls, the doorknobs, new bathroom countertops, a fire advert, fire suppression, new kitchen countertop, new appliances, a new kitchen, some painting, a backsplash, a kitchen crown molding, new downstairs flooring, a new pantry, and an open kitchen design. For the 3-bedroom and the 68 units of them, we're doing the exact same thing. For the exterior, a new signage, additional landscaping to improve the outside and improve the overall visual image of the property. As you can see, the total cost per unit is around $7,020, totaling up to $709,020 for capital improvements. Dayton, Ohio, and Beaver Creek submarket. We have the regional accessibility and the demographics. For the demographics, you can see a 1-mile radius employment density is above average, which is a good thing. 21.6% population growth since 2000, with additional projected 3.5% growth in 2017. The median household income in 2016 was $84,180 and has increased by 28% since 2010. Median home value in 2016 was $183,000, a 27% increase since 2000. Mean prices for townhomes in 2016 was $155,000. The working population of Beaver Creek grew 1.9% from 2014 to 2015. 46% of the Beaver Creek population have a bachelor's degree or higher. The current unemployment in Beaver Creek is 3.2%. Current employment is spread over 18 different industries, with 80% of jobs still spread over 17 industries. Jobs are expected to grow by 39% over the next 20 years, which is a great thing. Wage growth has had a 5-year historical growth of 11%. For the regional accessibility, the property is close to the Fairfield Commons Mall, which is 2 miles away, Wright-Patterson Air Force Base, 6 miles away, Wright State University, 3 miles away, Clark State University Community College, 1 mile away, Irvin J. Nutter Center, 3 miles, Schuster Performing Arts Center, 9 miles, the 1675 Highway, 2 miles, the 135 Highway, 5 miles, the 170, 12 miles, and then the James M. Cox Dayton International Airport is 20 miles away. So this is the rent comparables. You have 6 different comps on the list. You can see that the 2-bedroom for Fairfield Lakes is going for $947, while the average rent for the comps around the area is $1,165. We have our projected market rents at $1,233 for the 2-bedroom. That is around a $200 rent bump. For the 3-bedroom, you can see the current rent for Fairfield Lakes is at $1,050. The comps around have an average of $1,385. We have plans on bringing up the 3-bedroom rents up to $1,315, and that is about a $200 to $250 rent bump. The 5-year projected P&L. The 5-year projected P&L gives you an idea of what the total revenue is from the property, what the expenses are, what the net operating income is, and the cash available for distribution. You can take a look here at what the numbers are. The pro forma assumptions. Income. The gross scheduled rent, based on occupied units at leased rent and vacant units at market rent from the most recent roll, average turn is 4 to 5 units per month. We're allowing 3 years to bring rents up to market across the entire complex. Afterwards, we assume an annual 3% increase. The economic loss. Loss to lease. Represents the difference between market and contract/actual rents. Year 1 loss to lease is projected at 2%. The vacancy. Pro forma vacancy loss is projected at 12% based on the historical performance of the property plus added vacancy due to renovations. Average historical vacancy in the immediate area is close to the 5%, and we believe this is achievable with proactive management and better marketing. The collection loss. Collection loss is projected at 1% based on the historical performance of the property and market comparables. Now come the expenses. Advertising includes advertising, leasing costs, resident retention, and other marketing expenses. Based on our analysis, current owner is overpaying and getting a little result. We believe we would get better results on less dollars based on a more aggressive leasing strategy rather than just waiting for the phone to ring. Administrative includes computer maintenance and supplies, evictions, telephone, answering service, website and support, office equipment, training and travel, and other office expenses. Pro forma expenses of $5,000 per unit is based on the historical average. The payroll, year 1 and 2 payroll is $50,000 higher than stabilized due to added labor for CapEx renovations. Stabilized expense is projected at $990 per unit and has been increased over historical average to allow for 1 full-time leasing agent, 1 full-time maintenance, and 1 part-time maintenance. The insurance. While we believe there may be room for insurance savings, we decided to use a rough quote number received during due diligence. The pest control. Pro forma expense of $1,000 is based on our prior experience and not the historical performance of the property. The landscaping. Pro forma expenses of $20,000 is based on the historical performance of the property. The trash. Pro forma expense of $11,000 is based on the historical performance of the property. The repairs and maintenance includes expenses associated with the repairs and maintenance of the interior and exterior of the property and projected at $700 per unit based on the historical performance of the property. The make ready includes the expenses associated with making a vacant unit ready for the next move in and is projected at $350 per unit in line with historical performance. Snow removal. While this number can vary widely based on weather conditions, there is a flat fee per plow contract in place, and we took the average of the past few years to project $4,000. Taxes. The amount represented is based on a continuation of the existing real estate tax rate. Real estate taxes are reassessed every 3 years, and the next reassessment is in 2020, with payment in 2021. The reassessed value is based on information we received from a local tax appraiser. The utilities includes electricity for vacant units and common area gas, water, and sewer. Pro forma expenses based on a 54% increase over the trailing 12 months expense due to the increased usage during renovations. The management fee. Management fee is projected at 4% of the effective gross income based on discussions with the local third-party property manager, Simply Management. Capital reserves. Capital reserves are projected at $650 per unit. While this is on the higher end of the usual range, we would rather be more conservative in this estimate. This is the 5-year projected returns. If you invest $100,000, this would be your 5-year projected return, giving you an 88.5% return on your money. The average annual return is 18%. The average cash-on-cash return is around 9%. Your IRR is around 17%, and your equity multiple is around 1.89. Thank you. I hope through this walkthrough of the sample deal package helps paint a better image about what it's like to run and operate a multifamily assets, allowing you to understand the types of returns one may get when you invest with us and when you get to invest in multifamily in general. If you like the returns that you see and are interested in investing with us, please feel free to reach out, join our investors list, let's hop on a call and we can discuss what your financial goals are and we can come up with a plan that will allow you to grow your hard-earned money. If you have any questions as well, please reach out, contact me at chonalfo, ONALFO, at Golden Lion Equity Group or schedule a call with me. Thank you.